I want to begin this panel a bit different. I'm gonna start with you, Frank, and the conversation here is, I called it the future of currency wars, but we're going to be looking at the strength of the U.S. dollar from a global standpoint, U.S. dollar versus non-U.S. dollar trade. A lot of these conversations have been surfacing and surging in the last couple of years, and so. But it's very complex, and there's a lot of hyperbole in conversations like this because often it's tied to things like the decline of the U.S. empire and all of this. So I want to bring some realism to it. Frank, if you could, for me, outline, just give us some context. Paint the picture for us right now, U.S. dollar strength globally and trajectory.
Well, there's a shift taking place. It's actually a tectonic shift, and most people are oblivious to the fact that it's happening. And there was a lot of denial by Americans in general that this was even possible, but it's certainly gaining momentum now. And the shift is that there's a move away from the dollar, okay, as a trading currency. Also as a reserve currency for central banks, but I think the more profound change is happening in the trading, where a lot of the world, since the Ukraine war started and the sanctions were imposed on Russia and the money was frozen, Russia's money was frozen, a lot of countries around the world, almost everybody outside the G7, is trying to find mechanisms by which to trade outside the US dollar system. And we could go into the many mechanisms that are currently working, but the most common is bilateral trade agreements using just local currencies. That's sort of going to be the near-term mechanism until something happens, and I predict we're going to get a global monetary system reset at some point, okay? And the US dollar will lose a lot of its status. It may not lose entirely its reserve status, but it will have very major competition from non-dollar systems.
Now, just real quick, I asked this question this morning. I'd love to ask it one more time. If this is your first time at one of my events, would you mind just giving me a wave? Okay, I love seeing you guys here. So I just want to take nothing for granted in terms of this conversation. So my next question, therefore, maybe Andy, I'll pass it to you just to move down the line. If you could differentiate for me the difference between, as Frank mentioned, the reserve currency and the trade currency, and then we're going to start pulling on some threads.
Yeah, in terms of, for example, everyone focuses on the BRICS and their desire to have a new world reserve currency, but what they're really talking about is a settlement currency, at least for now, and a settlement currency would be something to be used in trade. In terms of reserve, typically the reserve would be in the form of U.S. treasuries, which have been weaponized, as Frank was saying, to a degree where people and governments around the world have really no desire left to hold U.S. treasuries, not only because they've performed poorly over the last year and a half, but because they've been weaponized, and countries feel, well, if they can do it to them, they'll do it to us. And to Frank's point, that's exactly what they've been doing, is building a network of trading with one another in local currencies. And by default, if you look at gold and compare it to the 10-year Treasury, over the past 25 years, gold has doubled its performance but has no counterparty risk. And it's universally accepted as wealth. So there is a good percentage of the world that is now usurping the addition or the accumulation of U.S. treasuries for gold, but settling in local currencies. Now, I would argue there is a strong possibility we will see a common settlement currency. In fact, they've already called it the unit, and the head of the BRICS New Development Bank, Dilma Rousseff, the former president of Brazil, has said as such. And we can talk about Enbridge and what happened with the BIS and how they pulled out at the last minute. It's almost out of a James Bond movie. It's espionage as far as I'm concerned. And it might be further along if it weren't for that. But I can assure you this, that the resolve of the global south of the BRICS nations to continue to find a settlement currency outside the dollar, whether it be gold, whether it be an agreed upon settlement currency, whatever it will be, it will have a dramatic effect on the US dollar's not only settlement status, but ultimately also its reserve status.
I have to pull on that thread, Andy. If you'd walk us through the Enbridge scenario and walk us through the James Bond picture for me.
So the BRICS Innovation Hub, or excuse me, the BIS Innovation Hub, along with the founders of Enbridge Technology, China, Hong Kong, Thailand, United Arab Emirates, for 4 years they've been developing it along with the BIS Innovation Hub. Last year, Saudi Arabia signed on as the 5th full participant of Enbridge. This is a big deal. The world's largest producer of oil is now saying, we want to be part of Enbridge. Del Marusov said, we will trade the BRICS unit currency, which is deliverable upon request to the central banks over Enbridge, called the unit. All of this was great. They have the meeting in Kazan. And at the 12th hour, Augustus Carstens, the head of the BIS, who resembles Augustus from Willy Wonka, only grown up, he says, oh, well, we can't be part of any program where perhaps one of the members is being sanctioned by the West. This is a guy who just more or less said, we just realized that Russia is the RM BRICS after 4 years. Pulled the plug, we can't be part of it, so now it's going from Enbridge to the bridge. And it will crystallize the resolve and I think ultimately incentivize other countries to join on. You can't trust the West. You can't trust the BIS. We have to go this alone. And you listen to a guy like Jim Rickards talk about they have a larger swath of population, of GDP, of military might, of on-sea and on-land trade routes, and the world's commodity production, not to mention China being the manufacturing hub of the world. All of that stuff is something that I think the biggest mistake of many people is to underestimate the significance of it.
What would be the accuracy versus the inaccuracy of comparing Enbridge to the alternative SWIFT system for somebody who hasn't been following that thread? The units is the exchange.
It's a blockchain. Enbridge is a blockchain. It's a cross-border, it's closer to like XRP than it is to the SWIFT system that's controlled by the United States.
But it's built to be the competitor.
100%. It's built to allow all of these countries to trade central bank digital currencies amongst one another without any interference whatsoever from the SWIFT system. And it's operational. It is working. They've already made trades where China has purchased both oil and gold from the United Arab Emirates over Enbridge. It is operational.
Yeah. Okay, and so to summarize, banning Russia from the SWIFT system provided the incentive for the BRICS nations to get together and build an alternative. That is Enbridge, effectively a SWIFT equivalent outside the realm of the US dollar, protected from sanctions, decentralized, yes.
100%.
Okay. Grant, I want to throw it over to you, and I just want you to jump in on what you've heard thus far, where you think the important threads are. When people talk about the concept of de-dollarization and countries migrating away from US dollar trade, distinct for me between the noise and the signal. What's important to you?
Well, I think there's one other really important piece of context here, particularly for people that are here for the first time, and that is the origins of the petrodollar and why the dollar is the world's reserve currency and the connection to oil. Because this, again, I talked this morning about how much change is happening. Underneath all of this are the energy markets, and the energy markets are changing as well. So but a quick history lesson, I don't want to bore anybody that knows this, but I'll run through it quickly. Back in the early 1970s, a guy called Bill Simon went to Saudi Arabia and made a deal with the Arabs and saying, we will give you all the weapons you need, and we will be the big brother backing you up because you live in a rough neighborhood, and in return you will only sell your oil for US dollars, period. You won't accept any other currencies for it. And that deal was made, and it's such an important deal to understand, because what it meant is that every country in the world that either imports or exports oil, which is every country on the face of the planet, has to hold US dollars in reserve to either pay for their energy or receive in exchange for their energy. And that was where the bid for US treasuries came from. Every country in the world, their central bank, would hold their reserves in dollars, and they would convert that into US treasuries to hold it. That has lasted for a very, very long time. And it's why this SWIFT thing is so important. That made the dollar the primary reserve currency in the world, because everybody had energy and needed to hold it. That enabled the US to run up massive deficits. It enabled the US to print dollars at will for things like QE. It's enabled the whole financial system to work. Now, several times in history, countries like Libya, for example, have said that they were going to accept euros for their oil instead of US dollars. And we ended up with Mr. Gaddafi ending up not being the leader of Libya. We've seen Iran, Iraq talk about this in the past. This requirement of every country on earth to hold US dollar reserves has been crucial. Now we're seeing this change, and the weaponization of the SWIFT system, if you take a currency that everybody has to hold, and you say to all those central banks, there is a circumstance or a set of circumstances under which we will confiscate your reserves, you now make sure this is not an option for everybody. They now have to come up with a plan to diversify themselves away from a complete independence from the dollar. That was perfectly fine while the US was benign and did not weaponize the dollar. You'll hear this phrase that Andy used there, weaponize the dollar. The world has changed. The energy markets have changed. The US is now a massive exporter of oil, not an importer of oil. So that means that the Saudis now have to find other buyers for their oil, which used to go to the United States. That's their impetus and their, the catalyst for them not wanting to be beholden to the US dollar anymore. So wherever you look, whether people are saying, look, US dollar trade is still the same, US dollar treasuries are still the same, the rules have changed now. You no longer have to have US dollars. In fact, you now have to have a plan to not rely on US dollars. And I think, Jay, it's really important because, as you know, Charlie Munger famously said, show me the incentives and I'll show you the outcomes.
Yeah.
The incentives have changed dramatically now. And that puts a stop clock on the use of the dollar. And whether it goes away today or tomorrow or next week or just incrementally gets chipped away, this has changed because every dollar that one country no longer needs to hold is a dollar that the US has to find a buyer for. Mm-hmm. And those buyers are getting fewer and farther between. So it's a massive change. You're not going to see it on a daily basis, but it's a huge change.
Yeah, Frank, you're nodding along here. I want to pass it to you next.
I agree with everything that's being said, but what people have to understand that the U.S. is quickly realizing this is a national security issue. Yeah. I would argue that the reserve currency status is as important as their military. If they ever lose their reserve currency status, they lose control over the global financial system. It's as simple as that. And they benefited greatly over the last 50 years, actually since World War II, by having the reserve currency. So there's going to be a reaction to this. This is not going to happen without I would say, very aggressive and perhaps a violent reaction by America. Trump has already threatened 100% tariffs on any country that contemplates de-dollarizing. And I think that's, to me, it's a sign of desperation, and I think it will backfire. It's only going to accelerate the de-dollarization movement. It's like if you can easily bully one kid in the back of the schoolyard, but if there's 50 kids lined up behind them, right, you're going to think twice. And this is the power. This is the beauty of the BRICS. And and as you know, the BRICS is now 11 members, and it's growing. There's a number like 40 applicants that want to join the BRICS, and that strength will allow them to have the courage, which they've never had, to actually move away from the dollar. But the U.S. will react, and it'll be with sticks and carrots. The sticks will be, we'll take away your security guarantees. Countries like Saudi Arabia will, exclude you from the G7 markets. They can use all sorts of threats. So but I don't think that's going to stop anything. This movement is well on its way, and there are very good reasons for it. A third of the countries in the world are under U.S. sanctions. 60% of the poorest countries in the world are under U.S. sanctions. Everybody wants to escape from this U.S. dollar prison they've been in forever, and so you can't blame them. The U.S. has weaponized the dollar increasingly, and it's payback time.
And so, that's an interesting perspective when you hear the incoming presidents make those threats. We're going to implement 100% tariffs on any countries that de-dollarize. And you have to put yourself in the shoes of the country hearing that message, and you could say, well, that sounds terrifying. I also know that he's going to be gone in 4 years, right? And how much do you think that plays into the incentive of these countries moving away instead of towards the United States when these threats are uttered? Grant, I'll pass it over to you.
Yeah, no, I think those threats might work in the short term. There'll be people that tomorrow don't want to be under those kind of tariffs. So it might work in the short term. But as Frank makes the point there, the more people there are lined up ahead, the more people there are working to find ways to trade bilaterally, and the more ways all these countries are reimagining and redesigning their trade deals. And so, let's take China, for example, the Chinese auto industry, right? Trump's talking about putting 100% tariffs on Chinese cars coming across. They will still be cheaper and better than American-made cars. I mean, literally, you look at some of these Chinese cars that are coming out, they're extraordinary, and they are a third of the price of the US equivalent. So you're going to have to start putting 200-300% tariffs on these goods to make them too expensive for Americans to buy. So America has an incredibly powerful place in the world. We all understand that. But that power is historical. And while it still holds true, what Frank said there is so important to understand. Everybody's incentivized to find an alternative now. And they're incentivized to come together and find a collective alternative. And once they get that collective alternative in place, and they start using it, even incrementally, you watch how quickly, when people realize there is a viable alternative, use of the dollar starts to fall.
So a perspective I heard on this stage a ton last year, and I've heard it a couple times today, not nearly as much, was that so much of this non-US dollar activity, and in combination actually so much of the global conflicts that have erupted, have been in response to a weak US leader. And a strong US leader has the ability to reverse those courses. Is that the case? Andy, I'll start with you.
No, I don't think so, not at all. I mean, to a degree, as Grant is saying, yes, maybe in the short term, but what he's doing is not imposing tariffs. These are sanctions masquerading as tariffs. He's pissing off the world. And I think, if anything, it solidifies. These countries, the 11, represent, as I was saying, a larger portion of human population of GDP. You add the Belt Road Initiative into it, you have 75% of human population and a growing chorus of countries that represent the majority of all of the commodity production, the transportation routes. They have the Red Sea covered right now in the Straits of Hormuz. You're talking about on sea, on land, military might. It's growing, and they're finding strength in numbers. And I think it would be far better to extend the olive branch with strength, but to extend the olive branch instead of continuing down the road of threats, which will only, as far as I'm concerned, just like the BIS did, it will not inspire trust and confidence in the Western system, clinging to the end, to the last vestiges of this system, of this cycle, of the Keynesian experiment, of a system that has been mismanaged. We're 36, almost 37 trillion in debt. That doesn't take into account Medicare and Medicaid and Social Security and government military pensions. We're 200 trillion in debt. A trillion seconds ago, as I said this morning, 31,688 years ago. We're broke. We're aggressive, and we should be going the other direction. So no, in fact, it might even have the opposite effect, and it may, in fact, incentivize these countries to do it more, and maybe just not be very open about it. And if we look at China and Saudi Arabia, their import numbers in gold, oh, yeah, you're right, we have been importing more than we said, and yeah, you caught us on the import-export numbers. Even though we didn't say we were doing it, we were, you caught us, and now China's going around to Peru and to South America buying all the concentrate and the doré. They're being covert about it because they understand that this won't be something easy. Grant was saying chipping away. That's why I'm very fond of the term logarithmic decay. Little by little by little by little, then bang, on a Sunday night, we wake up to a new reality. When is that? Don't know. But I agree with both of these guys. We're heading towards a reset. And food for thought, what better guy to have usher over a reset than the expert on bankruptcy and restructuring? I'm not saying it's going to happen under his watch, but maybe, just maybe, when he imposes these threats, maybe he's just trying to push the needle in that direction to reset the system. Operation Sandman, the dumping of treasuries, the dumping of dollars, spiking interest rates to the moon. What happens then? Stocks, bonds, real estate, the banks, the insurance companies, poof. Oh, but guess what? We can issue our new CBDC. I mean, I'm not saying this is going to happen. And if he does it, could he go down the road of pegging it to gold and silver, or could he go the opposite direction, the United Nations way and the World Bank? All I'm simply saying is that this is a lot bigger, it's a lot more fragile. It could go either way. I guess only time.
Okay, I'm gonna pull on that thread in a minute. I have to. Both Grant and
yeah, I'll make one point.
Grant, you first.
Then
I'll come to you, Frank.
Just I'll give Frank the floor. Just as a matter of perspective for all of us in this room, the U.S. dollar system, which we've worked under our entire lives, essentially our entire adult lives, all of us, has been very, very good for the West. Right? It's made the West incredibly powerful at a time when Asia was weak, was mired in poverty. But just imagine, try and flip the perspective and picture yourselves as living in Asia, where you've grown up exporting to the West, you've been under the yoke of the dollar, but now you have lifted hundreds of millions of people out of poverty. You are building a rising middle class, and your perspective is very, very different. Suddenly, the dollar system that has benefited us so well becomes a yoke under which you're operating. So you are incentivized to try and find a way out of that. We sit here in the West and we look at the world through our own perspective, our own prism. It looks very, very different to how it looks in the East. And I think the more we can get into the mindset of the people we're trying to think through what they're trying to do, we understand their motivations a lot clearer, I think.
Yeah. Frank, was there something you wanted to bolt on
No,
there?
I just want to say that Andy, I don't agree with that. That you're making the assumption that Trump is playing 3D chess with his strategy, and that's just not the way I think he's thinking this through. I think the U.S., I think everybody recognizes, the really smart people recognize they're in trouble. They've gone beyond. It's out of control. There's no way to reel this back in at this time. With the level of debt, the deficits are going to explode. Rates are going to be pushed higher by the market. You've got all sorts of, there's so much debt in the world, not just in the U.S., but it's all over the world. And there's so many black swans hatching everywhere that something's going to break. And I suspect it's going to break in the U.S. first, because you're going to have deficits of $3, $4, $5 trillion a year. We're going to get there very quickly to the point where there's an actual crisis. You've already have. The Chinese have dumped a lot of their treasuries. In the last quarter, they dumped $51 billion worth of treasuries. They're dumped $730 billion. Japan, who's been absolutely steadfast in owning U.S. treasuries at, I think, a $1.3 trillion holding, sold $63 billion in the third quarter, because they're having to defend their currency. You've got all these things happening because of all of this debt, and something's going to break. And I don't think that there is a strategy for it. I think there's a lot of distraction. And the game they're playing is distraction. This whole crypto game, I was railing this morning about crypto, but this to me is a huge distraction to get people, move people away from the idea of what is real money. And you've got, gold is the only real money in the world. And every country on the planet outside of this G7, including Eastern Europe, is buying gold and they're selling their treasuries, some very quietly. And as you said, Saudi Arabia and China are buying gold very secretly. And you have to ask yourself why. Why would you be very secret and not disclose your holdings? Well, I grew up I got into this business as a trader, 50 years, 45 years ago. And as a trader, if you're trying to accumulate something, you don't show your hand. And that's what they're doing. So while in the U.S. they're screaming at the top of their lungs to buy Bitcoin and Bitcoin ETFs and all of this stuff, the really smart, sophisticated people all around the world are buying gold. So ask yourself why the U.S. media, Wall Street, has never, ever, and still, even though gold has outperformed the S&P in the last 25 years, will never talk about gold. They have a reason, because gold, if you buy gold, that means you smell trouble for your home currency. And they know they're in trouble. And I think Bitcoin and all this crypto stuff is a distraction. I think it's a distraction from reality. And reality is going to hit home very quickly.
So consensus on the panel thus far has been we're heading towards some kind of monetary reset. Andy, I want to give that idea some airtime, but just to recap some of the things we heard, back in the height of the petrodollar, Libya tried selling oil outside of US dollars, US Army arrived at the door. Iraq tried selling oil outside of US dollars, US Army arrived at their door. And today we're seeing maybe similar threats made, this time with tariffs, but you want to trade outside the US dollar, we're going to tariff your economy 100%. That's a game you can play for a certain amount of time. But we're heading towards some kind of a reset probably, and you reminded me of a tweet I read this week posted by Elon Musk that said, global debt has now hit $315 trillion. Holy smokes, Earth sure owes Earth a lot of money, right? And if for no other reason than that, we're gonna have some kind of a reset. If you're in the position of the United States, you're gonna wanna be the one to trigger it, right? When disruption happens, you wanna be in control of it. You wanna be the one that caused it, not the one disrupted by it. Is that idea, Andy, behind your speculation that maybe Trump is the Trojan horse who's going to ride in and then lift up the curtain on the monetary reset through some vehicle?
Well, that's what I was saying today. Is he the horse or is he riding the horse? I mean, I think if you haven't learned to question everything over the last 4 years, then you've learned nothing, period. That's my opinion. And if we can all realize that from an indebtedness standpoint, it's game over. You don't think they've realized it? They know that there has to be a reset. We're $200 trillion in debt. How do you pay that off? You don't. And so either you default or you inflate. Or you could revalue gold to $142,000 an ounce and your balance sheet would be pristine. As crazy as that sounds, I interviewed Judy Shelton. We talked about this. She wants to introduce $50 or 50-year treasuries redeemable in gold. She even talked about issuing stable coins off of it. But if there has to be a reset, why would the most powerful bank in the world, the Bank of International Settlements, reclassify gold as the world's only other Tier 1 reserve asset? Why would the central banks be buying it at a level the world has never seen? And how about the repatriation of it? 40 countries have brought their gold home from the Bank of England and the New York Fed, because that used to give them access to the COMEX and to the LBMA. Why are they all doing this? Why gold? Why not something else as a Tier 1 reserve asset? You talk about something that maybe should be mentioned here also, and that is that, confiscation. No, I don't think it'll happen. I always said I think they'll take the ETFs. And this bears mentioning, just as to Grant's, things that make you go, one of the best I've ever seen. This makes me go, So JP Morgan paid a $920 million fine to the Justice Department for manipulating the metals market. They were allowed to continue to be the custodian of the world's largest silver trust, SLV, right? HSBC Bank was the custodian of GLD, but not anymore. Now, JP Morgan is the custodian of GLD, and they're moving all of the gold into JP Morgan vaults, who now possesses more gold than most of the G20 countries. You want to reset the gold price, reset it to a level. And by the way, in every central bank balance sheet, you know what the name of the account is that gold is held? The gold revaluation account. That is the name of it. It happened in 33. They confiscated, they revalued it, devalued the dollar by 40%. It happened in 71 when we closed the gold window. At $35 an ounce, it's now $2,700. Who's to say that they couldn't revalue gold to a level really, really high and peg a new system to it, reset the system? I don't know, but like I said, what better guy to do it than the guy that is the master of the bankruptcy and reorganization? I'm just saying, just think about it.
Yeah, okay, I like it. Frank, I want to give you the final word and then quickly run down the panel. Your top strategy for yourself right now to manage this transition. It's hard to time. We don't know, but we're going through it in real time. That's pretty fair to say. Top strategy for yourself and your portfolio to weather the storm, and any other comments you want to add on there, Frank?
No, I was just going to say that one of the things that a lot of people haven't connected the dots is that the countries that are participating in the Enbridge there's actually 5 and there's 31 observing countries at the moment. Those are the same countries that are buying gold in huge quantities. And and although we're probably not going to get a new currency like the BRIC unit that was talked about anytime soon, that's going to take a long time. But in the meantime, the one way that the whole global trading system can work under this new mechanism with these digital central bank digital currencies is that you have bilateral trade agreements between countries in their local currencies, central bank digital currencies, and at the end of a period, any unwanted currency, if you have deficits, if you're running deficits on a bilateral deal, you would settle that with gold, much like they used the bills of exchange back in the Middle Ages and right up through the Renaissance. That is an easy way to trade in local currencies and not end up with unwanted currencies. And that's one of the theories that I have why they're all buying gold. One of the reasons they're all buying gold.
Andy, final word, strategy to navigate the next few years.
Accumulate assets. It could be Bitcoin, could be gold, could be silver. Accumulate assets. If assets feed you, liabilities eat you. The wealthy people own assets. And for all of you people out there who like Bitcoin, I think we should be complementary to one another instead of fighting and divisive, because in essence we see the world the same way. The Bitcoin folks typically want to make more money, and the gold people want to keep it for their family and pass it on. And I would just simply say that there could be a marriage between both ideologies, and I think we're a whole lot stronger if we are combined, at least in terms of getting the word out there, because so many people who are well-read just read the wrong stuff, and you can't get out of the way of what you don't see coming, and there's some stuff coming. So I don't know, accumulate assets and do the best you can to mitigate your exposure to the dollar. I think that would be the best advice I could give.
Thank you, Andy. Grant, I want to give you the final word here.
My personal focus since right before COVID has just been on protecting my purchasing power. That, to me, has seemed like the biggest challenge that we all face. And as luck would have it, gold has done a phenomenal job in doing that. The median house price in the US is up 50% in the last 20 years. In gold ounce terms, it's fallen 70%. So having that in your head and understanding what precious metals can do for you in terms of preserving and in certain periods enhancing your purchasing power, it's a useful exercise to go through. So that, to me, the strategy is I don't want to not be able to afford what I can afford now because it's been confiscated by all the things we've talked about here in the debasement of the currency.
One more for you. Yeah, one more for you.
Come on, Frank.
Just listen, I'm sorry. I got to do this on the Bitcoin thing, okay? So I agree, buy gold, buy silver. I would not buy Bitcoin, and I'll give you the reason why. A, it's never been tested in a real crisis. It came after the financial crisis. If we ever get a US dollar crisis, do you honestly think that the American government, if everybody rushes to Bitcoin as a safe haven, do you think the U.S. government will allow that to happen? They're going to react, and they'll use national security issues. They'll use, too much. You're using too much energy. There's fraud. There's, terrorism. All this stuff that Bitcoin can be blamed for, and it's very easy to make it illegal, tax the hell out of it, shut off the on and off ramps, and you're screwed. You got a bunch of code sitting in a wallet. What are you going to do with it if they try and take it away for you? The thing about gold is that although governments may try and confiscate it from you, they'll never destroy it because they own it. That's not you can't say the same for Bitcoin. So I think that they're not equal. They're just not equal.
I never said they're equal, though. They're not equal.
Why
but I
can't we all
just said
get
for
along?
those people who like it, it's an asset. Accumulated.
That's what Jamie Dimon said, but Jamie Dimon, who's the CEO of one of the largest banks in America, JP Morgan, which has launched its own Bitcoin ETF, has said on numerous occasions he thinks that there's no value, that it's a Ponzi, but he used a great analogy. He says, listen, if people want to smoke, they should be allowed to smoke, although it can kill you. And so you got to understand about Wall Street, and they're not there to make you money, they're there to make money. They would sell futures and horse manure if there was a demand for it, and that's what they're doing with Bitcoin. And he's come out and said it. He's the head of the biggest bank in America. It's got to tell you something.
Well, look, I own a precious metals company, so you can see where my allegiance is. But I think to continue to fight this fight amongst the same mentality, at least in terms of de-dollarization, in terms of reasons to not have all your wealth in dollars, I think is a fruitless cause because they won't listen to us. So if you can't beat them, at least try and speak to them.
All right, we might not reconcile the marriage tonight, but we're going to keep trying. I appreciate all of you gentlemen. Please give them a round of applause.